Hello, hello, hello. Good morning. Happy PPI and Unemployment Thursday. How is everyone doing? Hey, Patrick. Good morning, Martinez. What light viewership? Well, we should just ban some short selling. Ban short selling, according to Jamie Dimon. Financial stocks. We're at that phase of the markets. So ES underperforming, that's an understatement. Yep. Good morning, Path, trading partner. Well, good morning, Jacob. Good morning, Options 22. All right. Yeah, this feels like a rug pull's coming up. After doing this for 31 years, but that's why I use stops. And it can also be a stop in reverse. Good morning, Paul. So, I don't know when the rug pull is going to happen. It feels like it's coming up shortly. This is getting unstable. Copper breaking down big time. We had PPI coming in a little better than consensus month over month, but up from prior. So back up from deflationary to inflationary. Core PPI pretty much coming in line. Year over year coming in line or slightly better than consensus at 3.2 versus 3.3. But the big thing is initial jobless claims. That was a pretty big miss to the upside, highest since I think it was October 2021. So jobless claims are starting to ramp up. Continuing jobless claims still coming in a little better than expected, but still above that 1,800 level. What else we have today? We have Waller, and that's about it. Waller, 45 minutes after the cash open. Google, again, on a tear. Amazon continuing higher. Oil pulling back. And the rest of the mega caps are sort of silent. You can see comm services leading the charge, then consumer cyclical. This is not strength of leadership. Fed watch, I'm just looking at the probabilities. We're at still pause, cut. Pause, cut. So the market just thinks the Fed's going to roll over in September. Still in greed mode. What else do we have going on? We're trading 41.40 right now, 41.55. So we're slightly negative gamma, which does accelerate and really starts accelerating below 4100. That's really my key level, still 4100 on a rally. 40, we've talked about that 4150, 4155 area being key. It's now key resistance again. It also takes us into positive gamma. And remember, next week is OpEx for May. Next week. There wasn't really anything in terms of earnings today, and after close, not much. I mean, we're winding down major things in earnings, couple key ones next week, but nothing really going on there. Who else? Hey, Anissa. Good morning, George. So, got this. Oh, by the way, I did that. If you're watching the live stream yesterday afternoon, I put this into Excel. So you take the top 5 of the weighted S&P, 20.71. Top 10, 28.20 roughly. Look at this. The top 15, 34% out of 500. There's technically 503 stocks in the S&P 500 right now, but the top 15 stocks by market cap in the weighting is 34. So you have 15 stocks is moving over a third of the index. This gets dangerous. Look at the bottom. All right, the top 50 is close to 55%. You have the bottom. Where is it? The bottom. I think this was the bottom. Let me double check. Yeah, this was the bottom. To 50 was only 16%. So again, we have a lot of concentrated stuff can be moved by just a few names. All right. Hey, Paul, ban shorting for financials. They should ban long positions in the AI stocks for next year. We're getting that state. You know what? When you start calling for banning short selling by Jamie Dimon, okay. All right, that's not going to really fix your regional banks. But if we actually start messing with the markets and banning short selling, just throw all this crap out. Good morning, Todd. Good morning. Hey, Mega Chad. Overall, see, we keep popping up in here. There's a fair amount of selling pressure above this 4150. Let's just call 4155. 1, 2, 3, 4 days. You see, with all these tails spiking up there and rolling over. So some pretty substantial selling pressure up there. I'm still watching, again, this 4155 area and the breakdown zone being 4117. And then really key is sitting at the 50 EMA, which is 4100. But is there anything other than that? I mean, we're back into this clear path of mess of a move from yesterday. So you're looking for support in front of that. It'd be about 41.26 going into the open. Minor support coming in about 41.33. I'll be looking back at this 41.53 to 41.55 as key resistance in the open, and then 41.64. Overall, daily cycles have got back to the top and rolling over again, and we have weekly cycles headed down. This is a multi-week thing. So don't lose sight of the bigger picture, especially with daily cycles back at the top. Do they have to roll over today? No, but it's going to be interesting closing up this week. If they ban short sellers, well, they'd have to start covering, wouldn't they? But you know what? Short sellers help actually stuff go up. That's what people forget about. Stuff can fall. You still ban shorts. They're just scapegoats. Stuff can fall on its very own. You have longs liquidating positions, and you know what? They ban short selling in financials. Are you going to rush in and buy financial stocks? I sure wouldn't be. I'd be like, why do you feel the need to ban this? So I think it would do more damage than good. NASDAQ still climbing. This, it looks sort of like it's climbing a wall of worry. Getting to cycle top on the daily, but that doesn't mean it has to top today. Getting a slight wedgie pattern here. 13,486 and 13,541 to 13,563 on the upside. Key support 13,350. And then about 13,300. So those are the levels I'm utilizing. And this is what I'm talking about. Even on a pullback, it now, in order to do technical damage, really the earliest sign of major technical damage to me is back below about 13,160. That's the earliest sign. But look at what it has to chew through because of this move to start getting some key stuff. Or we get some major down day pushing up, but we're setting up for divergences. This is waning momentum, but will it continue higher? Do we hold our nose and buy? So that's what I'm watching up here. Nothing's really changed with the levels. I'm keeping an eye on internals. Dow is actually down 65 basis points pre-market. None of this little rally. So you had the one rally day of Friday, but look at this. Before that, 4 days down. Since that one rally day, 3 days and today's so far down, and we have the double still in place. This is not invalidated. So I'm really expecting the Dow to come down and retest this 200. Levels for going into the trading day, bumping this one down. We're using yesterday's, so 33,375. Below that, about 33,270, then 33,170. Still utilizing this level to the upside on any rally, about 33,550, and then 33,723. So the Dow is the not the weakest. I should correct myself. The Russell is the weakest, down over 100 basis points so far. Still 1737 support, 1722. Resistance is coming in at 1766, but the Russell is weakening. So it'll be interesting to see relative to the low on Thursday the 4th. I'm not expecting this to get takeout today, but next week it'll be interesting because you see consistently lower swing highs, especially if today doesn't bounce back. So you got lower highs. We've been having lower lows, but it'll be interesting to see how this plays out next week. The VIX up slightly, but unless we really get some momentum above 1830, not really focused on that. One day we'll have to wait till the market opens, but it's still above 1530 is sort of a minor breakout level. The DAX holding the rotation zone in yesterday's lows, but we break below that, I will watch for a pretty potential swift move to about 15,800. Resistance, you can see the major resistance areas. I'm watching 16,000 notes. We're back in the double trigger territory. So 10-year yields are dropping again. Remember, we have this huge pattern that's been on the weekly, been verified, but not technically triggered on the weekly. Triggered on the daily, but the weekly. So it'll be interesting to see if we finally trigger on the weekly this week. And this is a multi-week, potentially multi-month pattern going on there. And here's your 10-year yield coming back down. Remember, on the yield basis, I thought this did trigger. Maybe not. Maybe it triggered on the daily, but not the weekly yet. So, but here's your yield. I mean, this could easily run it down. And my major target I'm focusing on is about this 275. But this would have stuff really start getting crushed in the economy. But until then, NASDAQ long. Dollar index still in consolidation, still watching for the breakout play. Letting the rotation zones on the daily out of the way. We got the 50 still overhead, and the weekly, we still guess could take us into the weekly with a target of about 102.75, but no breakout yet. So it can keep staying in consolidation. Crude finally getting the rollover, breaking below the trailing stop area. Rotation zone still holding. So 4-day rally. Rotation zone yesterday closing back down. Today the follow through to the downside. So let's just flip this over to see where the next support is. And you saw this oil stocks rolling over. The next major support is back to 68.77. Gold, still nothing. Unless you're day trading like Pep. Copper, here's what I started to watch this. If this bottom, remember we talked about 1, 2, 3 bottoms, 4 bottoms with yesterday's, and then today. Looked at copper this morning and I was, oh boy, I got some alerts popping up, and then poof, I'm not even pausing at the 200, coming back down to key support level. That is, from an economic standpoint, testing the bottom of the weekly channel. But if this breaks, I'll be focused on a return to about 359. So why is copper? So this could be a sort of the warning sign that, because copper production, mining has been lagging. But if we're going into a major global slowdown, you know, it never, remember we had that double or the bottoming pattern play out. We talked about this. It finally played out that I never got the follow through close above the 62.5. Never got it. I talked about that. You could go back to podcasts and saying, I need that close above 432 to maintain bullish mode. Never got it. And we're eventually getting the rollover play. Yen does have a potential double bottom. And we're trading against a key trend line. But can't get really bearish until we start getting it below this 133 area. Bumping this down a bit. Right there. But I will be watching because we do have a potential double bottom there. Euro finally breaking down. The Euro's a tough trade from my perspective because, yes, we broke down. We just broke through this next little support area, are into a little mini remaining clear path, but we got the 50 right in the way. So this is why it's got to be nimble. But this is rolling over. The pound, earlier we confirmed the double potentially. Let me get back to this 4 hour. It was confirmed. You see these two things. Now it looks like it's going to trigger on the 4 hour, and it's a completely valid pattern on the 4 hour. So on any rally, I'd be watching for rollover plays. And your key resistance is between that 125.78 to about 125.86 on any rally. And I'd be watching the declining 4 hour rotation zone. But we got that. Looks like it's going to trigger. Bitcoin has confirmed a double, but not yet triggered it. And this is a horribly sloppy one. So these are the targets for potential pullback levels. We'll look at the spiders and the Qs. We have that potential double top in Tesla. That's about it with the flagging channel pattern. Looks like we're having a slight gap up this morning, but that's what I'm keeping an eye on there. Spiders and the Qs. So 411.90 right now. 412.85 is yesterday's close. So that's going to be the first target on any rally. And then about 413.75 support. I'm still going off of, let me see. I'm bumping this down now. Minor support will be about 410.70, major support 409.22. We start getting below this 409 area. We got gaps left behind, so that's really interesting to the downside. But other than that, the breakdown for me is 409. The breakout is around 414. Anything in there is just shorter term patterns. Duck Qs bouncing off the harmonic level, both pretty much Wednesday and yesterday. Above here. What? I mean, that was yesterday. Sorry, I thought I was on the daily. That was yesterday, Wednesday. That would be yesterday. Wow. 327.58 is the next major target higher. Key support, 323.65. And then we have 321.50. So looks like pre-market we're above. So anything on the rollover play would be for the gap fill, 325.14. But again, 327.58. 327.58. Above that, let's see what we have. And that's also, you have gap to that open. The next key level would be 329.28. And then the next major level would be 332.28. So there are all your levels to the upside should you want to participate in the continuing NAS rally. And same thing that goes ahead. Even on a rollover play, it's got to do a lot of technical damage unless we get some major weakness and major breakdown day. All right. No, the market didn't like the unemployment numbers. The PPI numbers didn't phase it much. Yeah, I know. That's a good point, Paul. Good point. You just have to mention it. Did you see how many? Remember, I had to mention this before. Remember a few years ago, that every company was mentioning the blockchain, and they just rally based off of you, even if you had nothing to do with it. I am a beverage distributor, but we're going to the blockchain. Oh, well, let's buy that stock. So now it's just the AI. And the amount of times AI was mentioned on earnings calls, even for companies that just had a cursory tie to it, it was ridiculous. And if you mentioned AI, you pretty much rallied. So, IND targets. weekly targets. Well, based off the last, your key target is 41.90. I just watched 42 on a closing basis. Above 42, you start getting that on closing basis. 42.80, 43.63. Your major support, let's just look at that on the daily. I'd watch the daily rotation zone on any pullbacks, but your key support area is about 41 to 41.20, and then you don't really want to see it back below about 40.60. GM is just in the doldrums in this choppy area, but GM gets not good below about 30.75. You really start breaking below 30.75, I'd watch out below. Until then, the only minor breakout play is if it can get a close back above 34, and that would be roughly to 35. You carry on above 35, key targets is 36 and 37. They just happen to be the round numbers because you see this is the ledge, but you start breaking below the 30.75, it's a uh-oh territory and could be a major slowdown in autos. So you see here, you got a 1, a 2, slightly higher bottom, but we're going to call this a 3, 4. We could be putting in a quintuple bottom depending on how you count it. Or at least a 1, 2, 3 if you say this is all part of one bottom, 4 bottom. Well, big bottom, my girl's got them, but that would, I mean, I'd be watching for, we could pull back to the mid-20s easily if we break that 30.75. So be very careful from that perspective. Not saying that's going to happen, but that's where we'd be. You're welcome, Heinrich. Can we check the spiders? I did that. I go Disney. We want Disney. Hold on. Disney's with a huge gap down after earnings. The major support's 91.80. Let me flip this around and see where we sit. Just in the short-term basis. So key on a closing basis is 95.50. We're trading 90 roughly there this morning. So that's where I'd be watching on a closing basis. Any rally 97 is resistance at this point. Above that, 98.80, and then back to the 100, which is in front of the gap fill. But I'd really be watching this 95 because you break down below that, I'd be watching for a return to that 87.5 to 100%. Which could take us easily back to the 92 area. Easily. Which Unity Bank Core? I think that's the one you meant. Well, the 20 is pretty key. See, on any pop-up, I'd be watching for a rollover play in the rotation zone. It's back below, it's trading just below the 200 again, but you have key overhead resistance between about 22.70 to 24. So would this be a buy? No, because even if it popped back above there, 25, so that'd be very scalpy. I'd be more focused on this 20 level. Break below that, 17.25 is key. You get a close below 17.25, we could retest COVID lows. So, you want daily long for a daily long? Well, I'd be watching for at least on a daily basis. You're getting to cycles, a double topping area with cycles and overbought. I'd be watching for a pullback play before getting aggressive to the long side at this point. And those levels I already listed, this 41.20, 41.12 area would be a first key area on a pullback. So that's what I'd be looking for right there. Unity Software, what's just Unity Software. Well, you get the close above 29.81. Next major target I'd be utilizing is 31.87, 32.90, and then 33.85. You're with this little pop up. It looks like what was it, a beat. So I'd really be focused with continuing momentum up to this most recent swing high, then the 200 area. Above there, and look at that, with the 50, if you use the whole area, that'd be 33.83, which is where the 200 is, which would be a major resistance point on a continued rally up. You don't want to see this drop back below about 29. All right. All right. Well, you're welcome, Richard. So that's key for this Unity Software to break out 29. Hold on one second. There we go. Is key. Let me just peek now at what do we got? It looks like the NASDAQ's trying to having some resistance into the open. I'm going to be watching the NASDAQ at 13.4. We start breaking below 13.4. We got a little mini clear path going lower with some weakness. And since it's into the open, I'm just going to peek at the tick. Definitely opened weak. Wow. Definitely opened weak. Whew. So, and there we go. The weakness rollover in the S&P. So remember, major, this 41.15, 41.17, and then below that is 4100 is very, very key should it continue on the way down. With that, I shall talk to everyone later today. Have a wonderful trading day. Bye for now.